Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Aave or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Okay, let's unpack this deep dive. The sources you've gathered paint a picture of the crypto world in mid-November 2025 that is it's fascinating because it presents this huge contradiction.
It really does.
On one hand, you've got fear, volatility, and some pretty painful infrastructure failures. But at the exact same time, we're seeing this undeniable foundational growth from institutions and regulators.
It's the classic crypto dichotomy, isn't it?
Yeah.
The immediate feeling is just panic. But if you look at the long-term charts, the regulatory moves, it all suggests this fundamental strength.
Right.
So our mission today is really to cut through that noise. We need to look at the short-term pain, these sudden infrastructure failures, and then pivot to the the political and regulatory shifts that are quietly suggesting the industry is professionalizing at breakneck speed.
And the immediate state of the market, it definitely confirms that panic. If you look at the charts, yeah, Bitcoin has seen a slight recovery in the last 24 hours, but prices are still way, way below where they were just a few weeks ago.
And even close to those September, October levels.
Not at all. And the best indicator of this mood is that sentiment index. We are firmly in what the industry calls extreme fear. The number itself fell all the way down to 15. That is a deeply bearish signal.
And that collective anxiety, you can see it translating directly into investors just pulling their money off the table.
Absolutely. The data is, well, it's hard to ignore. We're seeing low volumes of stablecoins, which often signal reduced trading activity.
Right.
But the real impact is coming from these significant ETF outflows. This signals some strong structural bearish pressure from the big institutional players.
Let's talk about those numbers because they are. They're staggering. The total ETF outflow in just the last 24 hours hit $58.6 billion.
Billion, with a B.
Yeah, these aren't small movements. And what's maybe most surprising is that Ethereum actually led the outflows. It saw a massive $279 million exit.
followed by Bitcoin at 229.6 million. That's a key piece of data. Why do you think Ethereum, which is, often seen as the backbone for so much Web3 innovation, why did it see a higher outflow than Bitcoin?
I think it suggests that risk capital is being pulled from the smart contract layer first.
Okay, that makes sense.
While Bitcoin is often treated as like digital gold, a macro hedge Ethereum exposure is usually tied to optimism about future growth in DeFi and NFTs. So when institutions get nervous, they cut those growth bets first.
And that kind of selling momentum just gets worse with external shocks.
Which is exactly what we saw with a massive Cloudflare outage.
Right. For anyone who isn't familiar, Cloudflare is one of the pillars of the modern internet. It's a massive web infrastructure and cybersecurity company that keeps major websites fast, secure, and crucially, online.
And when they had their failure, the effects just rippled out instantly. It hit platforms you use every day, like X and ChatGPT.
But what really mattered for our space is that critical crypto firms, we're talking Coinbase, Blockchain.com, BitMEX, even hardware wallet providers like Ledger, they all experienced these major disruptions.
Because they all rely on Cloudflare services.
And this is where it gets really interesting and, frankly, a bit embarrassing for the industry.
A little bit, yeah.
The core promise of the crypto world is to build these decentralized systems that are immutable, that cannot be interrupted. Yet this incident proved just how heavily so many major protocols and Web3 projects still rely on centralized Web2 infrastructure.
For basic things.
Right.
Like API access, content delivery, just the front-end user experience.
Exactly. And it was a simple centralized failure, too. It wasn't some sophisticated cyber attack.
No, it was a faulty configuration file. Apparently it grew too large and just crashed the system.
Yeah.
So the decentralized network itself might be running perfectly fine, but if the centralized web gateway you use to access it goes down because of one line of bad code,
your whole system looks broken. You build this revolutionary censorship-resistant system, but it only works until the legacy web host trips over its own wires. It gives a lot of ammunition to the critics.
it does. But while that short-term panic is playing out, the long-term institutional train just keeps moving forward, and we really need to look at what they're building right now.
Okay, so let's pivot to the positive long-term news. And let's start with a huge institutional validation for Solana. Fidelity Investment, which manages about $7 trillion in assets.
7 trillion, yeah.
They, along with Canary Capital, are launching a Solana ETF this week.
This is so significant. It's not just another company launching another altcoin fund. When a firm like Fidelity and other big players like Van Eck and Bitwise, when they treat Solana this way, it solidifies its place as a macro asset.
Right, something that belongs in a serious portfolio.
Exactly. It's not just a speculative altcoin anymore. This opens the floodgates to capital that up until now was pretty much restricted to only Bitcoin and Ethereum.
And crucially, this isn't just a standard ETF that tracks the price. The Canary Capital one, it includes built-in staking features. They're partnering with Marinade Finance, which is a key player in the Solana ecosystem.
And this is a major sign of maturity. Staking, for our listeners, is just locking up your crypto to help validate the network, and in return, you earn yield like digital interest.
A bit like a savings account.
Kind of. By integrating staking directly into the ETF, institutions are bridging traditional compliance structures with native DeFi mechanics. They're offering their investors yield in a compliant wrapper. That is a game changer.
And speaking of compliance and regulation, maybe the biggest story for the TradFi world is the clarity from the Office of the Comptroller of the Currency.
Absolutely. The OCC, which is the Independent Bureau of the U.S. Treasury that regulates all national banks, they issued what's called Interpretive Letter 1186. And this finally gave the explicit green light to national banks for two critical crypto activities.
So what exactly did the U.S. banks get permission to do that they couldn't, or I guess wouldn't do before?
Well, first, they got clarity on payment for fees. This is huge. Previously, banks couldn't easily hold the crypto assets they needed to pay network transaction fees, gas.
Right.
If a bank wants to offer its clients custody or stablecoin services, they have to interact with the blockchain. That requires paying gas fees. Before this letter, there was this huge regulatory uncertainty about whether a bank could even legally hold those small amounts of crypto just to pay the fees.
So it removes a major operational hurdle. It's not about them investing in Bitcoin. It's about having the digital change to operate the digital machine.
Exactly. The second point was clarity on testing requirements. Banks can now hold crypto assets as principals for testing new or acquired platforms. This means a bank can confidently build out its crypto infrastructure without fearing regulatory penalties for holding assets they need for development and security audits.
So what does this whole OCC move mean for the wider industry? I mean, the sources seem to view this as a massive clarifying step.
Oh, it is. It removes the last major defense banks had for not integrating. For years, they've argued that regulatory uncertainty was keeping them on the sidelines.
Sure, that was always the excuse.
They were worried that offering even simple crypto services, like custody, could expose them to fines. Now that the rules are 100% clear, this move drastically increases legitimacy, it reduces their operational risk, and it provides a clear regulatory path for traditional finance to fully integrate with the crypto market. It's the final institutional seal of approval.
And while the big banks are finally getting comfortable, the established decentralized giants, they're not slowing down. Let's look at what's happening in DeFi with Aave Labs.
Right, one of the original biggest players in Ethereum DeFi. They're managing over $30 billion in deposits.
And they just launched a brand new consumer savings application.
This is a major attempt to cross the chasm between, complicated DeFi interfaces and simple consumer banking. The app functions exactly like a modern digital neobank, but it's all powered by decentralized finance protocols running in the background.
And the pitch to the consumer is massive. Users can earn a 9% yield on their savings.
9%.
And they get up to $1 million in balance protection, which just dwarfs the FDIC limit in the U.S.
The real insight here, the explain it like I'm five moment, is understanding why that 9% yield is even possible when your local bank is offering, 0.5%?
Not even that sometimes.
Right. DeFi protocols like Aave, they remove the traditional banking middleman, the costly overhead, the physical branches. By directly connecting lenders, the savers, with borrowers, they pass the vast majority of that efficiency gain back to you, the end user.
And accessibility is key. They've addressed the main friction point getting money into the system. It currently supports deposits from over 12,000 traditional banks. So it's as easy as setting up a PayPal transfer.
We also need to zoom out and look globally because the advances in the Middle East are moving at a different velocity entirely. The UAE specifically is just delivering major leaps forward.
Okay, so first, in Dubai, they unveiled the world's first AI-powered payment system. It's called Agent Pay.
Agent Pay, yeah. Developed by MasterCard with the retail giant Majid Al Futtaim. It really shows where payments are heading. It allows transactions to be completed seamlessly through a conversational interface.
Like a voice-activated chatbot.
Exactly. The demonstration they did involved buying 2 movie tickets entirely through dialogue, just talking to it. It proved that payments are becoming an invisible part of the user experience.
And the second major move from the UAE comes from Zanbank. They launched the nation's first dirham-backed stablecoin called Zanded.
And this stablecoin was immediately approved by the UAE Central Bank, which tells you everything you need to know about their commitment to regulated digital currency. Zanded is fully backed 1-to-1 by dirham reserves. And here's a crucial detail.
The transparency part.
Exactly. Those reserves are held in segregated, regulated accounts.
That distinction, segregated and regulated, is vital, right? It means the money backing the stablecoin is kept completely separate from the bank's own operating funds.
And the whole arrangement is monitored by the central bank. It guarantees the trust that you need for institutional use.
Right.
By deploying their national currency onto a public blockchain in this highly regulated way, the UAE is positioning itself as the definitive bridge between TradFi and the decentralized global market.
They're proving you can have the speed of blockchain and the safety of central bank oversight.
That's the goal.
Now, let's try to connect all these specific market movements back to that broader, often negative sentiment we started with. Because our sources highlight this fascinating argument about geopolitics and perception that they claim directly affects investor confidence. They point to a massive investment commitment that went largely underreported by mainstream media.
Right. This is the commitment from Saudi Arabia's Crown Prince to invest $600 billion into the U.S. economy, focusing heavily on AI and job creation. And we know President Trump was pushing for that number to hit $1 trillion.
$1 trillion, yeah. Regardless of the final figure, it's an enormous economic vote of confidence.
But the argument is that the media narrative chose to focus on negative historical topics, like past human rights violations, rather than leading with this massive economic positive.
And the insight here is crucial. It's not about direct causation. Nobody is saying a $600 billion investment directly moves the price of Bitcoin by $10,000.
No, it's about psychological contagion. The mainstream media sets the macroeconomic tone. And when they intentionally avoid highlighting monumental economic positives, it creates this atmosphere of generalized uncertainty and cynicism.
And that pervasive cynicism, according to the sources, contributes to overall investor timidity. It dampens risk appetite, and it feeds right into the negative sentiment we see in the crypto market data.
Like those huge ETF outflows we talked about earlier.
Exactly. It makes those institutional desks hesitant to commit capital to risk-on assets like crypto.
So we're left in this highly volatile, conflicted spot. Despite that marginal positive price movement today, the overall macro sentiment remains weak. We know stablecoin volume is a critical indicator for sustained positive moves.
And it's low right now.
It's very low. Tether USDT volume, which really needs to be closer to 220 billion to fuel a proper rally, is only sitting at about 158 billion.
And those low volumes, combined with that lingering feeling of extreme fear, just means that the current rally is fragile. Bitcoin is trading over 92,000, but based on these metrics, the price could easily fall below that key psychological support of $90,000 again very soon.
So the final synthesis here is pretty clear. The negative sentiment you see in the market often correlates with visible, easy-to-blame factors. A centralized Cloudflare failure, a distorting media narrative.
The loud stuff.
The loud stuff, exactly.
Yeah.
Yet, the truly consequential positive momentum, the OCC green light for banks, the Fidelity Solana ETF, the regulated UA stablecoin, that's all being aggressively built in the background, away from the immediate price panic.
The central lesson for you, the learner, is that success in this market means looking beyond the ticker tape. You have to understand that external events not directly connected to the blockchain US regulatory clarity, geopolitical investment flows, even Web 2 infrastructure failures, all of it directly and indirectly impacts the perceived value and stability of the decentralized ecosystem. You have to track where the foundation is being built, not just where the roof is leaking today.
And that OCC decision is the perfect place to leave off. It means U.S. banks finally have the clarity they need to offer services like stablecoin payments and crypto custody. But this raises a really important question for the future of the technology. If the biggest centralized financial institutions adopt these technologies, will the core promise of true decentralized autonomy be diluted by institutional control? Or is this necessary regulatory acceptance the only way to achieve genuine mass adoption?
That's the tension we leave you to mull over. We'll catch you on the next deep dive.